The global financial crisis or subprime mortgage crisis happened between the mid-2007 to early 2009. The starting point of the GFC can be linked to the flaws of the financial sector in the United States, resulting in a fatal worldwide financial crisis and ultimately leading to a global economic downturn by the end of 2008. When the market for subprime mortgages crashed in the US housing market, it started the crisis which resulted in a decline in consumer spending and job losses. The rapid spread of the economic recession in the United States swiftly impacted other regions and threatened to destroy the international financial system, which caused failure or near failure to several conventional and investment banks like Lehman Brothers, Washington Mutual, Bestons, mortgage lenders, saving, and loan associations. Many banks have to rely on government support to avoid bankruptcy through bailouts.
This crisis began when investors started throwing money into the US housing market. They bought an investment called mortgage-backed securities (MBS). MBS is where the financial institution bundles up thousands of mortgages and sells them as a security to the investors. Lenders had to produce more loans by lowering their standards and giving subprime mortgages to borrowers with low income and poor credit because investors needed to buy more MBS. Next, these lending requirements pushed housing prices up, making it seem like an excellent investment. Lenders and investors thought they would still have the valuable house if the borrowers defaulted. When many people defaulted, the lenders now had all these houses and needed to sell them to make a profit. Nonetheless, the supply of houses was more significant than the demand, which forced the house prices to decline drastically. Ultimately, excessive risk-taking by banks is caused by their failure to consider the probability of extreme occurrence or their too optimistic mindset. In order to lend money and buy more MBS, banks and investors borrow excessively with the assumption that house prices would rise in the future. As the housing market sank, banks and investors suffered large losses as a result of the massive sum of money. The capital market was impacted by the financial crisis of 2008. First, stock and commodities prices fell sharply between 2008 and 2009. Second, global trade and investment began to slow down. Third, the value of assets owned by the financial institution fell significantly. Next, there were many job losses and long periods of unemployment everywhere. Lastly, the cost of borrowing has increased because of the crisis, causing more challenging for businesses to raise funds.
Islamic finance, one of the fastest growing segments of the whole world in the financial industry. Businesses and individuals raise capital according to the Sharia or Islamic law. Did you know that during the financial crisis 2008, it proved that Islamic finance systems were not significantly impacted? How Islamic finance can mitigate this issue? This is because profit and loss sharing is the fundamental Islamic financial concept. This concept needs to be learned to curb the issue of subprime mortgage during the crisis. Secondly, haram sector will not include in Islamic system because it involves of prohibited elements such as interest, uncertainty, and speculations. Next is receiving riba or interest are prohibited in Islam activities, and the transactions must not contain excessive ambiguity or uncertainty. This principle can safeguard financial assets and the right of market.
In lesson learned, first point that we can learn is both bank and investor cannot be greedy. The crisis happened because bank does not evaluate their customer before approving their loan. The know your customer method is important to help bank lower their risk from losing their money. In these cases, the bank suffer because the borrower has lower ability to pay their loan. For the investor, don't easily freak out with the speculation. When you greedily withdraw the money, your loss is huge than people that stay in the economy. That is why the investor must seek knowledge when enter the investment world. The second choice that investment can take is ask the professional investment analysts. They know better than people in public.
In 2008, the global financial crisis raised concern about how conventional financial systems operate. Consequently, an alternative to Islamic finance has emerged. Islamic finance functions not only resilently to absorb shocks, but it can also provide efficient and fair ways of financial intermediation. In contrast to conventional finance, which is based on speculation and interest, Islamic finance is focused exclusively on genuine economic transactions such as trade, profit-sharing investing, and a few other forms of conducting business. Unlike in traditional financial systems, where money is regarded as a commodity, the fundamental purpose of money in Islamic banking is to measure the values of commodities and goods. The distinction between conventional and Islamic finance system is that the latter does not permit business dependent on interest payments. The fourth lesson is risk management. As stated by Naveen in 2013, one of the lessons from the global financial crisis is keeping track of a firm's risk appetite. In addition, the board should have developed a better and more effective risk management system. During the crisis, one of the most important lessons for the bank was to segregate the broad risk management control, which is overseen by a chief risk officer. The person filling the role should be a knowledgeable professional who reports to the board and has full ability to execute risk management controls.
To conclude, overall discussion and analysis of the world's biggest crisis in 2008 has proved that Islamic finance is a feasible alternative system to tackle the mess found in the conventional system. Throughout this video, we have seen many research and study has highlighted the salient feature in Islamic financial system in order to pass the obstacles and challenge brought on by credit crisis. 2008 credit crisis has been an eye-opening for the world on the Islamic banking sector. Hope this video helped with your understanding. Thank you.